We'll take you to the markets here, give you a picture again on what's happening. We're modestly in the red. Joe, you really do have a feel that this is going to be a wait and see, a wait and hear. We need to hear what the Fed chair is going to say about the path forward for interest rates before I think we're willing to place our bets in any large degree around this market from here.
I think you're always trying to understand what's your risk in the market when you're investing. And I think the risk in thinking about Friday is that the chairman's words are not in rhythm with the market expectation. I'm not sure you're going to get what we got 1 year ago. 1 year ago, the chairman stepped in front of the microphone and said, we are at a moment, we are at an inflection point where we're going to pivot from focusing on inflation to focusing on the labor market. And in fact, with that pivot, we will be cutting rates potentially in September. I'm just not sure you're going to get that succinct a message on Friday. And that's somewhat the risk, and the risk that you have to understand that will present 4 weeks thereafter where volatility might be elevated. And I said last week, if you want to kind of think about reshaping your risk in a portfolio that's long, maybe you go out and you buy some volatility. That's a smart play, and you hope that you're wrong. But I think that's the one negative about Friday that you have to understand, that you don't get the clarity for the next 4 weeks because his words are not in rhythm with the market.
I mean, even, Shan, if you get clarity, but the clarity is a continued sort of balanced view of where they see the risks lying. Evercore ISI talks about that today and suggests you could get a 7 to 15% pullback into October. If we're left with this view that, hey, we don't really know what's going to happen in the months ahead, whereas we were pretty convinced that we were going to get at least one rate cut, you may have a different story to deal with in this market.
Especially after the July non-farm payrolls report. I think everyone felt like that's where you started to hear this cacophony around 50 basis point cut in September, which our view at Neuberger was that was definitely not the base case scenario. But I think the challenge is that if you look at the last 8 weeks, 6 of those weeks, the S&P 500 has been higher. Although, we've seen all-time highs in the S&P 500 and the NASDAQ. We've also seen, Scott, last week, we saw a really nice rebound in small cap stocks as represented by the Russell 2000. So, the challenge here is that you are looking perhaps not only for Powell to support some of the language that's come from Waller and Bowman, more importantly, you're actually looking for him to deliver a much different performance than he did in the last Fed meeting, at which point multiple points during that press conference, equity markets got very skittish about the potential for rate cuts not coming and not being fulfilled.
He, Powell, the chair, obviously had a more hawkish bent in the last meeting, which is what you're referring to, why the market reacted the way it did. Jimmy Goldman today says if you look at the prospects for slowing job growth, they're still on the case for 3 cuts this year, and 2 for next. And by the way, Barclays today also out with their projections looking at a single rate cut in December. So again, what the market maybe thought was a September beginning, followed up with maybe an October and then December. I've had calls for none this year. Goldman's 3, this one 1. It just shows you nobody has a good handle on what's going to happen.
It's a good point. And nonetheless, I'll give you my opinion that I think the Fed should cut, Scott. And just, let's take it one step at a time. They should cut 25 basis points in September. I'll give you 3 reasons why. As Joe pointed out, the market is not in sync with where the Fed, or at least Chairman Powell's head, has been recently. The 2-year yield is screaming that the Fed should be cutting. The second reason is the data supports it. And Shannon, you pointed out that jobs report. Obviously, we know what happened with PPI last week, but the Fed and Chair Powell himself has said that he thinks that it's going to be a one-time price increase, and maybe that's what we're seeing. The last thing, most importantly, is politically, I think it's wise. If he doesn't cut by 25 basis points, throw a bone, for crying out loud, President Trump's going to come after him hard. He's not going to pull any punches. Chairman Powell and the Fed Open Market Committee stood their ground in July. Bravo. Don't do it for too long.
I mean, I'm trying to figure out, what more could the president say?
He could actually take action. He could actually take action and say,
so you think if he doesn't cut rates in September,
yeah,
the president would fire him?
Yeah, I do. Now, I don't know that. I'm not stating that with factual evidence. It's the future. But I do think we're on the thin edge in terms of Fed Bank independence, and I wouldn't risk it here.
Maybe this is why Wolf today says they wouldn't be surprised to see choppy sideways trading persist into month's end. I'm just looking to have the luxury of having a shot here of the White House where a vehicle has just pulled up as we await these arrivals for these meetings that are taking place today. And there is a greeting if we can see that now. That is Mark Rutte. He's the Secretary General of NATO. Who's just arrived, and we, as we said, over the course of the next 45 minutes, we do expect to see many more of those European leaders showing up at the White House, culminating, of course, with President Zelensky of Ukraine himself, which is going to be the moment that everybody is waiting for, whether you actually see the president greet him or you see, just like Mr. Rutte entering the room and will presumably be greeted on the inside of the White House, but we'll see that when we do. Steve Weiss, I'll come back to you here, or I'll go to you, and I appreciate your patience on the notion that, you know, all of these unresolved issues that we've just discussed relating to rates and the Fed, that it's going to be choppy, if nothing else, because we just need some degree of clarity before we're willing to put that next batch of cash behind a specific view in this market.
I think that's absolutely right. And the speech coming up on Friday and then the Fed meeting decision on September 17th, there's so many agendas that are unlike any other Fed meeting, whereas mostly about the economy and the confidence of the Fed chair having in his viewpoint. Now, I think he's still got his viewpoint. I think the market is clearly set up for a cut. And I'm not talking about what the bond market's predicting with futures, which show more than 90%. But because of that, that's already reflected in the market. And that's already reflected in the NASDAQ and the S&P meeting new highs. So what I'd say the biggest risk is obviously to the downside if Powell doesn't play into that narrative. And I believe that because this is his last speech at Jackson Hole before his term expires, that he's probably going to focus on giving it back to Trump and talking about Fed independence, which he firmly believes in, as well as what's transpired during his term. So I don't expect to hear a lot about, you know, what he's going to do or any hints about what the Fed may do in the 17th, particularly since there's so much data between now and then. So that comes back to your scenario about very choppy markets, which I believe is what you're going to see. You may see some minor new highs, but it wouldn't surprise me, depending upon the dialogue going forward, if you also see some give back in the market. But I don't think, you know, you're going to see whatever, you know, down 15% after Friday or any major move.